hopefully this answered some of the questions that you guys have about the different sectors, how Roman chose all of the different sectors, what is incorporated in many of the different things that we have, and why you're seeing the growth that you are. You should be able to look at your portfolio, and it tells a story of almost what's happening in the world.
Hello, everybody. Welcome to YBI, when we discuss financial ways and strategies to grow yourself and your finances. This is Roman and Zion here. How you doing today, my brother?
Living life, bro. I'm living. I'm having a great time. How are you?
Let's go. Also wonderful. Also wonderful. We got another exciting one out today for the people. We're talking about something kind of deep. We got a lot of info on this one. We're talking about market sectors and what they mean. What are they? What's going on? We've kind of touched on them here and there in the show, but we've never actually kind of gone like through definitions and what they kind of mean for people. So let's do it.
Market sectors. All right. So yeah, he said that is exciting, and it is, but it doesn't sound like it. Market sectors, as described by the Motley Fool, is a stock market sector is a group of stocks that have a lot in common with each other, usually because they're similar industries. There are 11 stock market sectors according to the most commonly used classification system, the Global Industry Classification Standard, or GICS.
Yeah, I'm like, it's basically what you hear on every, I don't know, it's like every show you usually hear about the markets. It's usually reference to this, like industrials are down or utilities are up, healthcare is down, flat, or whatever. It's always usually reference to these kind of things when you hear any type of major like market moves or these certain sectors of the market or what moving and what aren't. Usually is what people do to kind of group them all together. So yeah, let's get into it.
Yeah, so I feel like we can go through the 11 different sectors, let you guys know what they are, and if you're following along with our M1 account, the next video on M1 that you will see is going to be a little bit different. I switched up my M1 slightly. It's still one that you guys can follow along with, but we can compare our M1 accounts to let you guys know exactly where we're investing within these sectors. So starting with number one, energy. So energy is a sector that we have. I don't have that one. Do you have that one?
Energy sector in what, my portfolio?
Yeah.
Yeah, I have an energy one.
What's in energy? What are some of the stocks that you have in your energy?
Like
sector?
Chevron. I don't think I have BP anymore.
Exxon
I have a lot of like
in there too.
Yep, Exxon. I have some like iClean, which is a clean energy ETF. I used to own some Plug Power, but then I sold that because it was just doing really well. Oh, actually, that's the wrong sector. Where's my
so other
energy?
Things in the energy sector, we're talking oil, natural
BP,
gas.
Yep, anything like that.
Coal,
any type of
ethanol.
Actually, I have a couple of like ETF funds, like VDE, which is Vanguard Energy ETF. That's like a collection of all the energy stocks, because I really wasn't too for sure which ones I really liked in that sector quite yet. So I wanted to just own like a little bit of everything. So I have that, but then I have like Exxon, Chevron, BP, and then iClean. So I have a little collection of stocks I picked there, and then ETF just covers them all. I also have Spiders in there too, which Spider is a investment trust company that just does a bunch of that stuff.
Gotcha. So all that stuff, oil, coal, ethanol, all of those fuels are part of the energy sector. The energy sector does not include renewable energy. That's going to be part of the utility sector. So if there are some things that are renewable that you guys were thinking that were going to be energy, we're going to touch on that when we get to utilities. But those are a couple of the ones that we have in M1. So if you don't have those, you can go ahead and add some of those that we discussed. ExxonMobil,
if
Chevron.
You want to. It's not an investment advice.
Yeah, this is about what you want to do. One that we've been talking about a lot over the last couple of videos has been materials. What's going on with materials right now? So we're talking chemicals, construction materials, containers, packaging, all of that stuff. All of those things are going to be in the materials sector. Some of the bigger ones that we're talking in that sector are Sherwin-Williams, DuPont. What else you got for materials? Anything else that you want to mention?
Ternium. Also Southern Copper Corp is doing really well for me. PLC, Compass Minerals International. The entire materials market is just up. Honestly, if you had
Mhm.
throw money into there like a year ago, you probably have been doing really well if you just threw all your money just in materials. So
Yeah.
whatever. You
So
find material stuff.
the sector on our M1 account for materials is called Material World. In there we have Lin, LIN.
Yeah, Lend PLC.
Yeah, that one. There's Southern Copper, Compass Materials, and Ternium. That's what you were talking about?
Yep.
Yeah, Ternium. All right.
I forgot what they
So
mine.
follow along. Again, so let's go on to the next one. Industrials. You want to take industrials?
Industrials. So industrials cover pretty much a wide range of most things, but they usually like your airlines, your railroads. Can't talk today.
Yeah.
Railroads, anything like that, and like aerospace, defense, construction, engineering industries, anything like that. So usually what you find in there is like a big one, Boeing. Everyone knows that one there right off the bat. Let's see what else we had in there. A couple of
Union
examples.
Pacific.
3M, Caterpillar, that's a good one. GWW Granger or WW Granger Incorporated, Waste Management, the people who pick up everyone's trash everywhere. Ecolab, the people who clean up in restaurants and things like that. Emerson Electric, GE Electric, they make parts and things like that for almost everybody. General Dynamics makes a lot of parts for like aerospace and defense and things like that. So there's a bunch of companies in that space. They're good long-term plays. Usually you can feel pretty safe putting your money kind of in there. Really good aristocrats usually float in the industrial space. Not too many big moves and things, unless like I guess the biggest mover, depending if like big contracts kind of go through. You know, if there's things in like the military or things like that that might pop up, maybe with the new space things going on, you can find some pops in that kind of industry. But usually it tends to be pretty just overall safe place, good hold of value. It'll go up a little bit and good dividends.
All right. So onward to utilities. So utilities is going to
Utilities.
be your renewable energy sources. We're talking electrical power, all those different things. And what's interesting about utilities is that you probably haven't heard of some of these, especially because it's like based on where you live. So
Yeah.
what is it? Duke. No, Duke Energy is one of the ones that we have in here. We don't have that in Central America. That's more of a Southern thing. But we got it in this portfolio. Utilities is Learn Some Utility on our M1 account. And then we also have Southern Company, PPL Corp, Public Service Enterprise, Brookfield Infrastructure, and American States Water Company. So
I just
those are the
like
ones that we
investing
have.
in water. I feel like you should invest in some water, you know.
Water.
Yeah,
We are investing in water.
I know.
American.
I know.
Yeah,
I
yeah.
just that's why I picked that one. I was like, I feel like I should find a water company.
Water, yeah, it's very necessary. So this one's a little bit different just because they're very regional. But that's utilities. Moving on to healthcare. On
Because
you.
everyone gotta feel better and everyone needs their medicines and everything there. So what do you go for that? You go to the healthcare. Where is there it is. Cool. Bam. So in this one, you always have your typical ones, your pharmaceutical companies, your um convenience stores like that, the people, the pharmacists, things like that. So you're like Johnson Johnson, Pfizer, Aflac insurance, health insurance companies, Cardinal Health, people who make medical machinery and things like that. Pets Medic Express Inc., which is a medical company for pets. They send out things for pets. I wanted to really find a pet company that was, I feel like that was a good long-term play on that one. And that's why I kind of picked pets. But then it got caught up in a little bit of like the meme stocks for a little bit there. But I'm still holding on to it because I still like it. Then you also have like MJ, which is in the healthcare medical there for medical uses and things like that for it. Walgreens, CVS, you could talk. Well, CVS actually might be in consumers. I gotta check, but Walgreens is definitely in healthcare as well. So that's your
Yeah,
typical play there. But it's never a bad play to go into healthcare if you get really good at investing. You know, you find a lot of like biomedical companies who make these new innovating designs and whatnot that you can invest into. So healthcare is always a good industry to always be looking at, always strong.
oh yeah, healthcare is always one of the strongest because
Yeah,
healthcare is always a necessity. There's
you
always,
always need the
in
stuff.
the world that we live in, there's always, death, there's always war, there's always this, that, and the third. So healthcare
And you
it,
went dark.
and healthcare and pharmaceuticals are one of the industries that we invest in just to make sure that we are, obviously we don't want these things to happen, but the realization is that people are dying every day. So the healthcare profession is one that consistently stays pretty strong. Mine are currently down as we're recording this video.
Really?
Actually, no, they're not. They're up 2.7%. But when I go in there, I can see some of them that are down.
Oh,
Up right
like
now, Johnson
individually.
Johnson, Pfizer, Aflac, Cardinal Health. What's down is Walgreens and PetMed and MJ. So, it happens, but it's balancing
Oh,
out
the
to the point
retail
where I'm still
stores.
up, so healthcare, the sector as a whole is still doing pretty well right now.
It's true.
Financials. So financials are
The banks.
the people that are handling your money. Yeah, it's the banks. It's also insurance companies, brokerage
Brokerage
companies,
houses,
consumer
mortgage
finance.
houses.
Yeah, all that stuff. Which one is our financials? Is that bank balance
Follow
sheet?
the
Follow
money.
the money.
Nope.
There you go.
Follow the money.
Follow the money.
That's really what it
So
is. You just invest in the people who are the banks. You just follow the money.
yeah, this one's down. Everything is down in here. We got
Yeah,
Chase.
financials is down for like the last week. I forgot what happened. I think some
I don't
earnings
know.
statements came out.
I don't know why it's down because
Yeah.
I mean, we got Chase in there, we got MasterCard, Visa, Bank of America, Blackstone, Goldman
Yeah.
Sachs, Citigroup, Discover, and American Express. For some reason, all of them are down
It
currently.
could also be because of like I don't know. It could be a lot of things. Could be a lot of factors in like inflation or mortgage rates. I did see a couple stories on like mortgage rates starting to like go back up or something like that. So I don't know. I gotta look into that. Or maybe it could be spending going down. I'll look into it. I saw a couple stories. Well, I'll come
It,
back on the next M1
right now, it is.
update.
So since I am in the home buying process, in the last stage of the home buying process, they did say that we got in right at the right time. We have the lowest APR that has ever been in. Actually, no, the lowest ever mortgage rate was 2.69%, way back in the day. Currently, I have the lowest that you can possibly get, which is 2.99. So they are saying that things are coming back up, back to they're leveling off. It's still kind of a seller's market, but not nearly as much as it was, 6 months ago when everybody was selling their house 50, 60 grand over. But again, we look at the different sectors, you're looking at how is that affecting the real estate market, right? So you're looking at banks and you're also looking at the materials. You're looking at all the different sectors, how they're working together and how one is going up and the other is going down because the other one is going up, or both of them are going up together. So it's just interesting to see how, the things and the events of the world are affecting the market in real time. We're seeing that, and we're seeing how the different sectors are addressing them or correcting themselves. So
right, they could work together or they could not work together at all. It really just depends. Some of them go hand in hand, some of them don't. I don't know. It's weird. Market itself is weird.
It's very weird, but hey, that's what we're here for. You're on consumer
discretionary. And then for that, that's our services on demand. So think of things like Lowe's, Home Depot, McDonald's, Amazon. These like your retail stores that you kind of go into, your brick and mortar kind of restaurants and stores that you walk into. So in that one, I do have like Lowe's, Starbucks, Home Depot, General Motors, McDonald's. I have Cracker Barrel in there because I love Cracker Barrel.
I'm about to go right
Nike.
now. I'm about to go right
Nike,
now.
so in this one you can even like at one point I think I even owned some like Lululemon in here before, which I kind of wish I had. Crocs, which I brought up at one point in time, was one of a really good performing stock over the last year. Will fall into this sector. Actually, no, I don't know. I think Crocs does. I gotta check. I'm pretty sure. So things like that. So in this case, it would basically be your store-bought brands and stores that you go into every day. After that, you have your consumer staples, which some people also you can put that into like consumer defensive as well. Those are like your Coca-Cola brands, your Pepsi, your Kellogg's, your Colgate's, your name brand things that you go into a grocery store and you can pick out, and they own like everything in the store anywhere, like General Mills, Walmart, Target, McCormick. What else you could say in there? P&G, Procter and Gamble, things like that. Your household names and brands that own everything that you pretty much have inside your house.
Next is the information technology or IT sector. This is the tech that you use. This is going to be your HP, this is going to be your Dell, this is Apple, this is Microsoft, this is all those major tech companies. They're all kind of blended in there. Do you have where is your sector called for that on
Teched Out? It's called Teched Out.
I don't have that one.
That one has like Microsoft, Apple, Cisco, ADP, which does like a lot of like payment processing for almost a lot of companies out there. Intel, Qualcomm, Texas Instruments there's a lot of like semiconductors, a lot of like tech things, tech devices. AMD, and then I have a Norton LifeLock on there for cybersecurity, and then NVIDIA as well, just for the chips and things like that. They're all in tech there. You also can have like your Dell or HP and things like that. But these are like my core ones that I feel like were really good plays that I liked. I might even make a new sector in here, maybe like a subsector called like gaming, because just because I feel like that's a rising little mini sector, but we'll see. So, but those are kind of like some picks for that there.
All right. Communication services sector.
Communication is key.
Yeah, so for communication, this is the telecommunications. So in this one, you're gonna have your Facebook. Is Google in
Oh,
there? I
Facebook,
feel like
no, Facebook and Google will still be in tech. You have like Verizon, AT&T, Disney, Viacom, your
it
your
says that
cable
it's in
companies.
communication.
Really, for Facebook?
Yeah,
Facebook
it's
should be
got
in
Facebook.
tech.
You're not wrong. I'm just saying. It says these are the biggest ones that are in the communication
I guess
services
so.
sector.
Maybe. Yeah, it does say it on the article. Do they communicate? I guess they help other people communicate.
It also has other entertainment services. So, like Lion, what's that? Lion, whatever.
MGM.
Yeah, there you go. All of those people. Those are part of the communication services. So anybody that's big radio, big TV, social media apparently is one of them. What is Alphabet?
Alphabet is a company that owns Google.
Really?
Yes.
Huh. I didn't know
Alphabet
that Google
is
was
Google's
owned by
parent.
somebody. I thought Google
Yeah.
was the parent company.
No.
Man, that's wild.
Nope. No.
Now I gotta Google this.
No, I gotta Google this.
Well,
That's
dang. Why would I? Okay. What else do they own?
I think they own a couple other like companies as well. They pretty much own everything underneath Google though. And then
Man,
a
their
couple things in
revenue is
China too.
$182 billion last year. Their total assets 319 billion.
I mean, bro, yeah,
I didn't
huge.
know. Yeah, they own the local Google.
Look at this. Growing up the knowledge right here on the show.
This is
Live
wild.
time.
Yeah, they're a conglomerate owned by Larry Page and Sergey Brin. Okay, good for y'all.
Good for y'all.
Hey,
y'all doing big moves.
I really didn't know. Investments and acquisitions. I want to see what else they own. Alphabet acquired Capital Backup startups.
I think they just bought like a self-driving company too. Neo. Anybody Neo? No, Neo still its own thing.
Man, good for them. I had no idea.
Big most.
And they provide electronic medical records for oncology patients. So they're in a bunch of stuff. They're okay. Cool. Yeah. Oftentimes there are massive companies that own other companies. A bunch of the car brands are owned by, like, Bugatti is one of the most expensive car brands in the world, and they're owned by Volkswagen. Like there are bigger companies but I just didn't know that about Google specifically. So
what was next? We got lost in that tangent. Oh, real estate.
Real estate? Yeah.
Real estate. That one's called real estate goodness. And real estate is just investing in land and investment properties, or there are some properties or companies who go out and make like the subdivisions in the suburbs and things like that. You can invest in those in what's called REITs. And the most important thing to really bring up as far as like a REIT goes, as far as real estate goes, is the dividends that you get paid out on REITs are taxed differently than what you get paid out from other dividends. So you get taxed a little bit differently on them. You get taxed immediately on them, and you have to declare them kind of differently. Besides that, because on a REIT stock, they have to pay out 90% of their profits to their shareholders automatically. So a lot of times it's always good to have those, especially in long-term dividend growth portfolios. You'll pretty much always make money from them. They're usually pretty constant, not too much fluctuation in them, but you always can kind of go there with them. So in there you have like your O. You always hear O about in every long-term dividend growth portfolio. Land, which is my favorite one, is agriculture. Iron Mountain, I really like just because I like what the company does. They're just security for big tech and like other financial companies. They basically hold all their cybersecurity inside of a big mountain fortress. And I like the idea about it. So I decided to invest in it. LTC Properties. I forgot what kind of properties they actually do. Lamar Advertising. Pretty much every billboard you see, or a lot of them that you see, is done by Lamar Advertising. You see a little name at the bottom of it. That's Lamar. Essex does a lot of like high end real estate properties. Then I have like an overall global ETF in there as well. So there you go. You can always expect real estate to hold steady for you and produce steady dividends. It's always good to have it that as like a good constant in your portfolio. Real estate.
Right. So the last question that people may have that are following along with us in M1
Diversify.
is the Island Fund. So let's describe how you came up with the Island Fund. How are some of the things that are in here? So we got Schwab, we got 2030 Aggressive, Vanguard, Bank Balance Sheet, all these different things. Where do these things land in terms of the different sectors? And how did you bring them all together to create the Island Fund by itself?
So the Island Fund is more meant to be more of a even more down the line than the dividend growth one. That one's meant to be even more like a retirement fund, if anything. So that was meant to just hold long-term growth and value no matter what and produce steady gains. Whereas the dividend growth income one was meant to be more of a dividend producer. And while riding out growth, I was kind of comparing those two portfolios and see which one would kind of do better. I expected the DGI one to not perform as well as the Island Fund long term as DGI did, because DGI had a lot more individual stocks, and I feel like that was a lot more risk in there than straight up Island Fund. Because Island Fund is global, it's straight up global, it's the overall market, it's very set, it's more conservative in that mindset. Whereas dividend growth income has a little more risk to it. So it might have more gains short term, but I don't know how to look like long term, to be honest. I don't know, because I only
I
had that
mean,
portfolio for like a year.
currently Island Fund is outperforming everything else. It's up
Yeah.
8.5% overall. That's why most of it's like 48% or something of this entire portfolio is going straight into the Island Fund, and then everything else is split up. Um, and you want to have a diverse portfolio, because
Yeah.
that's what happens when something goes down. My entire portfolio doesn't come down. You know what I'm saying? It's because it's so diverse. So when real estate, follow the money, material worlds are all down, all three of those sectors are down, but overall my portfolio is still up 7.29%. So you're still making money. It's just that, you give yourself that cushion. If something happens to tank, then you're still going to be in the green. You're still going to be
Yeah.
positive overall. So that's what we're looking for long term.
And if no one's if I don't know if Zion, if you even started to use Atom yet, but if you use Atom and you log into there and you can sync it with your M1 portfolio or a couple of your other ones if you have other in brokerage apps, it'll even let you know on the day like your entire portfolio what it did versus the S&P 500. Like if the S&P 500 went down 0.3%, it'll say your portfolio was up 1.2 or whatever that day. So sometimes it's good to even get those little notifications, because you might see it one day as like down 0.7, but versus the S&P 500 for the last 2 weeks, you're up like 30% on them. So it's good to sometimes see those live tractions or live tracking like that as well. So yeah.
Yeah, so hopefully this answered some of the questions that you guys have about the different sectors, how Roman chose all of the different sectors, what is incorporated in many of the different things that we have, and why you're seeing the growth that you are. You should be able to look at your portfolio, and it tells a story of almost what's happening in the world. So as things are, getting better and coming out of, COVID, obviously things are starting to get back into the green, versus, there was a massive dip when markets crash and all that stuff. So you should be able to tell an accurate story of what's
Yeah.
happening in the world by the way that your portfolios are responding.
So
So
I'm gonna actually share the screen real quick of how Adam kind of shows the dividend growth income portfolio on M1 for people. Boop, boop, boop. So so this is actually how it shows it broken down, and versus the year versus the S&P 500 up about 30%. This portfolio is up about 57% on like the year for it. So it's a very good kind of tracking thing. You kind of can use that. I don't think the sector allocation is quite right. I don't think I'm 18% actually there. I think it's because CHL is messing up this portfolio as well. Like it's saying it's up 366%, and it might be like that over in China, but I can't use it or touch it. So it's kind of thrown off my portfolio. Um, So besides that, it still shows like Lowe's, Viacom, GE, literally the same stocks we were just talking about. It shows them all there, and it'll show you what's going on within those as too. So it's a good way to kind of track and see what's going on, and it'll show you versus the live market too.
But
Yeah.
so if you're on the audio, just take a second to pop over and watch the video, just so you can kind of see what Adam's looking like. If you need a review of that, Roman can do it. I ain't doing it. But yeah.
Did we do a review of Adam already? Did we not do a review of Adam?
No.
Maybe we did. Maybe we did our top apps. I think we did our top apps, and Adam was included. Maybe we can do it in detail, like dive into Adam.
I haven't used it yet, so we can definitely take a look. I can take a look at it.
Maybe we'll get you signed up for it. Yeah.
More sign. We'll see. We'll see what happens.
It's free.
If you want to see
Adam
it,
is free.
If you want to see it, let us know. We'll take a look at it. But for now, that's what we have for you guys today. Remember to just go ahead, keep on adding, keep growing, take baby steps to make sure that you're going to maximize everything long term. And as always, you guys know what it is. We may be young and we may even be broke, but we are always investing. Thank you guys so much. Till next time. Peace.
Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.